capital or revenue related reserves. When you talk about reserves, there are two categories, capital reserves and revenue reserves. So these type of reserves, what are the movements taking place? We got to show it in this heading. I have here ordinary share capital. There are so many headings. Now I just bring only related to the revaluation. So I would have here revaluation surplus, and then I have return earning, and then I have total. Please note that doesn't mean this is the exhaustive list. It may have 10 lines here or 10 columns based on your real ground situation. Now, we have generated 300, and that 300, now we also have opening previous year balances. So previous year balances for share capital and for the return earning, and even sometime you could have done a revaluation in the last year or previous years or prior to several years. So you continue that balance here. And the current year gain on revaluation under this column, how much? 300, and then you bring this 300 here. This is the basic presentation and recognition criteria for revaluation surplus. Finished. Life is over. Very good. But again, the misery starts now. What? The standard goes on to discuss additional points here now. When you perform a revaluation, please note this. This is very important point now. When you perform a revaluation, as I told you, you may have done a revaluation on the first time, or you may also conduct a revaluation on the subsequent times as well. So, see, when we do a revaluation, I would have first time. My result could be gain or deficit. Possible or not? In the previous example, it is a gain for me. But suppose if that my net book value was 1200, and if I say it is 800 new value, then I am making a deficit of how much? 400. So I have both possibilities. So standard says, if the revaluation is the first time, and if you make a gain, how to present this? Standard tells you, you got to present in two places. One is other comprehensive income, as I did in that previous screen, and statement of changes in equity. You got to present here. Clear? Where will you present? You will take that 300 and you will go and disclose in your income statement at the bottom as other comprehensive income. Habibi, faham? Good. And then, not only there, also in the statement of changes in equity, you will show that. Now coming to this, suppose I have a deficit of 300. Deficit is something same like loss. When it is a loss, simple story, without any thinking, you got to present in your profit and loss account as a loss. Who says this? Muhammad Ashik Khan says this. He just here like a baka baka. You know baka baka? He's a parrot. I learned this word from a Qatari guy. Baka baka means if the parrot repeats. So I am just a parrot here. This is stated by the standard. Clear? Next. Subsequent. Now, the company could go on to revalue this anytime, any number of times. So the first time, I had a gain of how much? 300. For the sake of simplicity, I will assume I had a deficit of 300 also. Now subsequent time, it is still possible I might have two outcomes. It could be either a gain or a loss. Yes. For you today, you have to sit in the ground floor because you're late. I'm just joking. Sorry. Right. So, you have a gain of, you may have subsequent revaluation. How you say, baby? Okay, brother? So, you could have a gain or a loss in the subsequent revaluation. So, let's say, first time I have revaluation gain of how much? 300. Now, I have a gain of 400. So, or I have a loss of, meaning not a loss, we use a different term here. We say deficit of 400. How will you deal with this? This is also very important. The standard specifies this. What the standard says, please look into if the previous prior year also gain and the current year also gain, no change in the treatment. Do the same thing. Other comprehensive income and statement of changes in equity, like what you have done here. But if the previous year is a gain and the current year is a deficit or a loss, but then standard says, please, to the extent of the previous gain, I deliberately written more than this number here. To the extent of the previous gain, you debit to other comprehensive income and statement of changes in equity. How much? How much maximum I can debit here? 300. And the remaining number, 100 is remaining. This 100, I have to take it to P&L 100. Everyone understood or confused? All of you understood? Shiti?
You understood or confused? 300 reserve already there.
Last year, I have done a revaluation and then I made a gain of 300. It is sitting in my financials. How I present the last year, I shown in the other comprehensive income and statement of changes in equity. Current year, when I went on to do the revaluation, it is ended up a loss of or deficit of 400. The standard then tells you how to deal with this. To the extent of the previous year revaluation gain. So here 400 loss, last year 300 gain. So to the extent of that gain, you only deal with the same place where you dealt with last year gain. You have to debit now. If I show that here, now I have the other comprehensive income title. Here I will say deficit of revaluation and I will show 300. Why? Last year also I shown here 300 gain. So I am just netting off that. And the result I am netting it off. The same thing you need to do it in your statement of changes in equity. And the remaining any result, what will you do? Take it to P&L. Now coming here, same possibility. You may have a gain or a deficit. Last year deficit, and if the current year also deficit, our life is simple. You take it to P&L 400 loss, kalas. Job done. But last year deficit of 300 and current year gain of 400. Now what you do? The 300 to the extent of the previous loss. You have to take it to profit and loss as another income. And 100, do the same thing as what you have done here. So here, P&L 300 and then other comprehensive income and statement of changes in equity 100. This table or this diagram is very, very, very vital. Either you practice, either you do exam, either you keep your knowledge. This screen is vitally important. Please remember that.